G'day folks, welcome back to another update for the S&P 500 and the NASDAQ. Now both charts are showing bullish momentum, both broken to the long position after a bit of a weakness in the last couple of weeks. But just be careful of that resistance. We haven't broken above that yet, and we might see a pullback again. It could be a lot stronger as well. We never ignore divergence, and there's a divergence currently in play as well. If we go any further, make sure you hit that like and subscribe button to support the channel. Thanks for that. Now, in terms of looking at a deeper dive into the analysis, into the trading strategies we're looking at, you can find an analysis on the +1 videos. That was recorded some time ago. Links in the description below. And we do introduce the CCI14, the CCI350 and the Heiken Ashi strategies, and we'll cover those in today's video as well. Now, as of today, August 11, the S&P 500 and the NASDAQ are experiencing increased volatility due to a combination of factors, with geopolitical conflicts playing a key role. While strong corporate earnings and the AI sector continue to provide underlying support, escalating tensions in the Middle East are a major concern for investors. These conflicts, along with ongoing war in Ukraine, introduce uncertainty into the market, particularly around oil prices and global economic stability. While a full-blown crisis spillover is not the base case for most analysts, the threat of supply disruptions and rising energy costs could weigh on market sentiment and corporate profits. The overall outlook for US markets remain cautiously optimistic, but investors are becoming increasingly sensitive to geopolitical news, which could lead to further short-term corrections and create buying opportunities in fundamentally sound stocks. So first, looking at the S&P 500, and if you're regular to the channel, you always know we look at the long-term trends to get an idea of the overall trend. So here we've got the weekly, the daily, and the 1 hour. So if you're trading on the 1 hour time period, it's best to trade in the direction of the higher time frame, in this case the daily. Now what we've got here on the weekly, first off, we've got this bearish divergence, lower highs on the CCI versus higher highs on the price, and that's still rising somewhat since our last video, and the CCI is still dropping, so nothing really changes in that bearish divergence, I should say. So as soon as that starts pulling back strongly, we'll mark a 23-38% Fibonacci range. Now also note, we've got this fair value gap down here, and that hasn't been penetrated yet, so if the price does come back, we expect it to reach into this area at the very least. But at the moment, on the weekly, it's bullish with the CCI and the price above the moving averages. On the daily as well, it was neutral previously on the CCI. You can see there that CCI has finally broken through that moving average range, and the price is also above the moving averages, giving us a bullish momentum. Now, we did draw this little direction arrow, and I'm going to adjust that and make it into a bullish momentum there. So taking long trades only. So previously it was neutral and you would have avoided going long or short. However, notice this resistance up here at 64.36, and the price hasn't actually penetrated through that yet. So again, also notice we've got a bearish divergence here, and this is different timeline to the weekly, but the daily is also showing a bearish divergence. And I've drawn a target range there, the 23-38% range. If the price pulls back, it may very well likely come into that range. It could just touch it, or it might break a lot further to the downside. On the hourly, again taking long trades only in accordance with the daily, you'll notice the CCI is just above that moving average range, and the price is as well. Ideally, I want to wait. You want to have a fresh breakout. Like, it would have been ideal to go long around about one of those candles there when the CCI broke above the moving average range. That would have given you a nice entry to go long, and you'd be almost about closing it out as soon as that breaks into that moving average range in the coming hours possibly. So probably just wait off until this actually retraces and bounces through that moving average range again to start going long. So just hold off for the moment. In terms of the trading strategies, we've got the three strategies here, the CCI14. In the middle here, I've got the Heiken Ashi, and on the right, I've got the CCI350. Very quickly showing you the strategy. So and these are 1 hour time periods. So when the CCI14 breaks above the zero line, you enter a trade. So back here, for example, you would have entered a long position there and close it out with a 0.3% target. And you don't chase it, you just let it go 0.3% and get out of the trade. On the Heiken Ashi, you wait for a fresh breakout of the Heiken Ashi, which was a fresh breakout on that candle there. The Heiken Ashi has to also be above the moving average 30 and the moving average 200, but also the CCI150 has to be above the moving averages. Enter a long position, wait for a 0.3% gain, and get out of the trade. So I had a couple of trades there. And lastly, on the CCI350, this one we're waiting for the moving average 100, a weighted moving average, to start turning bullish, and it did so in that little period there. It's hard to tell in that moving average line, but that was starting to turn bullish. You would have entered a position. Now in this case, the price dropped, and it finally entered another bullish momentum or bullish movement on the weighted moving average, entered another position, entered 2 contracts, and it finally broke out with a profit there. And more recently, it's just started going long again at that point there, and you're still in the trade on that one. And you close out the trade when that CCI breaks below that moving average. That's where you would have closed out the trade on that one there. So that's the trading strategies of those 3. Now, what I've done here, first of all, going back to the daily chart, I've started it back here on the daily when it broke above, on the hourly, when it broke above the moving averages of the 1 hour time period. So around about the 4th of August. So going back to the 4th of August of each of these back tests, that's where it's marked by that period there. That was also coincided with the end of our last video. So you can see here the CCI1500 strategy generated $1,044 in terms of revenue with those 2 or 3 trades. The Heiken Ashi strategy generated $341, and the CCI350 still in play generated $1,439. So just different strategies for different opportunities for you to consider. Next, we look at the NASDAQ. Now on the weekly for the NASDAQ, again, we've got another long-term bearish divergence, lower highs on the CCI versus higher highs on the price, and that hasn't started to pull back yet. Still bullish on both the price and the CCI, so bullish momentum on the weekly. On the daily, again, it hasn't actually broken through this resistance at 23,710, but it is above the moving average, so taking long trades only. Likewise, the CCI150 is above the moving averages for long positions only. Ideally, I'd like to see that break through that resistance to take long positions. On the 1 hour time period, you can see there it's broken below the moving average of the CCI, even though the price is above. So wait for that to break above to enter a new trade, a new contract, and watch it carefully. But at the moment, if you're going long during that period, it's probably wise to take your profits off the table and once that hits that moving average range, because this could start pulling back down to a reversal at the moment. But again, I'd like to see it break through this resistance to be a lot more confident of bullish movement. Going to the back tests. So on the CCI14, you can see there we've had 2 trades, and that generated $111. The Heiken Ashi strategy generated $138 with 3 trades made, and the CCI350 still in the trade, it hasn't closed out yet. That's generated $2,814. So now I'll go to the back tests of the 3 different strategies in terms of the analysis of the results. So what we have here is a template of the results of the 3 strategies. So the first column here is the strategy for the CCI14. The middle column is the Heiken Ashi strategy, and the third column here is the CCI350 strategy. So the first table of results there, you can see there the CCI350 generated the most, and we're trading here, we're looking at Alphabet, Amazon, Berkshire Hathaway, United Health Group, Nvidia, and Tesla. I'm going to be using the same stocks to test against each strategy, just to keep consistency in the results. So you can see here the CCI350 strategy scored the highest revenue with $621,000. The CCI14 scored the second highest with $518, and the lowest revenue was the Heiken Ashi with $89,600. Now that's one aspect or one KPI you need to look at. The other thing to look at is the drawdown. Now, so the drawdown is the result of the highest level of profitability to the lowest level of a drawdown, which has the highest impact. So what we're looking for is a low drawdown. So the lower the better. So here you can see the Heiken Ashi only generated almost 58,000 in terms of a drawdown total for those stocks. The CCI14 generated 166 in terms of a drawdown, and the highest drawdown was 346,800 for the CCI350. So just be careful that even though the CCI350 had the highest revenue, it also had the biggest drawdown on your account, whereas the opposite was true for the Heiken Ashi with the lowest revenue but also the lowest drawdown. So the middle ground there was the CCI14 strategy on this particular analysis. And that's what we look at. This next table is the revenue over drawdown percentage. So that's where the CCI14 came out on top, followed by the CCI350, followed by the Heiken Ashi. The last thing I look at, is my personal interest for me, is the number of trades made. So that's important because I like to get in and out of trades more frequently. So here you can see we had a lot more trades on the Heiken Ashi versus the CCI14. And lastly, we had only 56 trades made for the CCI350. So you've got to sort of judge what it suits your risk appetite. And at the bottom here, it's got a ranking of what came out on top. In terms of profit over revenue over drawdown and number of trades, the Heiken Ashi came out on top. So it really depends on combining what KPIs matter most to you and what risk profile you have. Don't just look at the revenue generated. You also need to look at the drawdown as a secondary option at least. So look at those two factors at the very least. So again, don't forget to reference the +1 video attached in the description below, where we go in a deeper dive of these 3 strategies. Thanks for your support. Hit that like and subscribe button, and speak to you in our next video.